Okay, so you know how a candy bar used to cost $1 5 years ago, and now it costs $2? That's not because the candy got better. It's because of something called inflation. And here's the thing they don't tell you. Inflation is literally a transfer of wealth from people like you to people who own stuff. It's the most elegant theft in the world. Nobody's robbing anyone. It just happens. And by the time you notice, half your money's gone. Welcome to Money Matrix Explainer. Let's break down how you're being bamboozled by something invisible. All right, let's start simple. Imagine you have $100, and let's say the inflation rate is 10% per year. That means everything costs 10% more next year. Your candy bar went from $1 to $1.10. Your pizza went from $10 to $11. Your rent, $1,000 to $1,100. But here's the trick. Your $100 is still $100. It hasn't changed. Your money didn't grow. The prices did. So what was $100 of buying power last year, it's only $90 of buying power this year. You didn't lose $10. Your money lost value. That's inflation, and it happens to literally everyone with cash sitting in their pocket or even in a regular savings account. So who's responsible for this? Governments and central banks. And it's not because they're evil or anything. It's actually clever. It's almost accidental. Almost. Here's what happens. The government spends more money than it collects in taxes, so it prints more money to cover the gap. More money equals each dollar is worth less, equals prices go up. It's like if there were 100 pizza slices but 200 people. The price per slice goes up because there's less to go around relative to demand. Same thing with money. More money in circulation equals less valuable each dollar becomes. And when the government prints money, your money, the money you already have, becomes less valuable automatically. It's like they're diluting your wealth without asking permission. So who gets hurt by inflation? You, if you have cash. Savers get destroyed. If you save $10,000 and inflation is 5%, you just lost $500 in buying power. Poof, gone. People on fixed incomes get destroyed. Pensioners, retirees, their money from last year buys less food this year. People with debt, actually, they win. Wait, what? Yeah, if you borrowed $100,000 for a house at 3% interest and inflation is 5%, you're paying back your debt with money that's worth less than when you borrowed it. It's like you borrowed $100,000, but you're paying it back with $80,000 worth of value. The bank loses, you win. So inflation punishes savers and rewards borrowers. Here's where it gets interesting. Rich people don't have money sitting in savings accounts. They have assets, stocks, real estate, art, businesses, gold, crypto, whatever. And here's the beautiful or terrible, depending on your perspective, part. When inflation happens, asset prices go up. Why? Because everyone's trying to get out of cash and into assets. A house that was worth $300,000 becomes worth $330,000 when inflation hits. A stock portfolio that was worth $100,000 becomes worth $110,000. Rich people's wealth actually grows during inflation. Meanwhile, your $10,000 in savings, it becomes $9,500. So inflation is a wealth transfer machine. It takes money from people who have cash and gives it to people who own assets. And guess who owns all the assets? The rich people. It's not a robbery. There's no criminal. It's just how the system is designed. So why should you care? Because it's happening right now. Every single day, your money is worth a tiny bit less. If inflation is 5% per year, that's 0.4% per month, 0.013% per day. You can't feel it daily, but over time, it adds up. $100,000 saved today becomes $47,000 of buying power in 30 years at just 2% inflation. That's how retirement savings evaporate. That's why people who did everything right, saved money, avoided debt, end up struggling, because the system was literally designed to punish them and to reward people who take out debt. They pay it back with cheaper money, buy assets. Their assets increase in value. Spend money instead of saving it, because cash is a depreciating asset. Now, here's the thing. Inflation isn't always bad. A little bit of inflation, like 2%, actually encourages people to spend and invest instead of hoarding cash. It keeps the economy moving. But the current inflation, the levels we've seen, that's not helping the economy. That's just transferring wealth from the poor to the rich. And the worst part, nobody talks about it like that. They call it the price of living. They blame companies for greed. They talk about interest rates and money supply like it's rocket science. But it's simple. The government prints money, your money becomes less valuable, rich people with assets get richer, poor people with savings get poorer. That's it. That's the whole game. So what do you do about it? Well, that's the next video. We'll talk about how to protect yourself from inflation and actually build wealth instead of watching it evaporate. But for now, just understand this. Your money is in a game, and if you're not playing, you're losing. Drop a comment. Did you realize inflation was this straightforward, or did you think it was some complicated economic mystery? I read every comment, and I'm genuinely curious what blew your mind. Hit subscribe because next video is going to show you exactly how rich people use inflation to their advantage and how you can too. See you there.